Hey, Steve Saretsky here. As always, this is the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. As I had mentioned in last week's video, I will be, for those that are in Toronto, I will be in Toronto at the annual Veritas Housing Conference. I will personally be doing a slide on the state of the Vancouver housing market. So I think that should be a lot of good info there. If you want to attend, I'm going to put a link again to that below. It's not a cheap ticket. I think it's $400. But if you're in the finance space, certainly encourage you to check that out. Or vice versa, if you want to watch it online, I think they have a streaming service there as well, so you can order that. But a lot of good speakers there, so looking forward to that. Also, before we get into this week's video, I actually just wanted to address a comment that I had last week. Someone said that someone tried to call me out and says, "Oh, BS, you as if you can time the market cycle." And so just a bit of a clarification on that. First of all, I've never once brought in timing on anything. Second of all, you can't time the cycle, but you can certainly map out and have a very good understanding of where you are in those cycles. So there's a lot of, for example, Ray Dalio, that's his entire model basically at Bridgewater, the largest hedge fund in the world, is they actually have what's called a growth and inflation model, where basically they take all the data series and inputs and basically invest based on where you are in the market cycle. So it's called the growth and inflation metric. There's various things that you can look at. Obviously, if you don't have access to the largest hedge fund in the world, there's a lot of things that you can look at. On the retail side, there's Hedgeye. Hedgeye does a great job of that. I think they're about $1,000 a year annual subscription, where they do the same. They have built their own sort of growth and inflation models. But again, just outside of that, you can look at what's called the ISM or the ECRI, and those are very good models to sort of see what's happening in the economy, and these are very telling indications of where you are in the cycle, so to speak. But again, there's various metrics and other indicators that you can look at. Again, you're never ever going to be able to time the cycle, to the month or to the date, but I think you can certainly see, basically, as Howard Marks says, who's, I would argue, the master of market cycles, you can get a gauge of what inning you're in. And of course, central banks sometimes have the ability to push that ball game into the extra innings, which I certainly think we're probably in right now. So speaking of market cycles, what we can typically see, an interesting report from the Bank of Canada this week talking about the relationship between the growth in home prices and the growth in consumer spending. And if you watch these videos, this isn't really any sort of news to you. I've talked about ad nauseum that as home prices rise, people extract that equity, and you have a growth in consumer consumption as a result of that. It creates not only the wealth effect, but it also creates more credit, creates basically someone's growth in their income is someone's spending power is the growth in another person's income. So basically, the more that you spend, the more that is basically propelling someone else's income. And so this creates basically a positive feedback loop. And so the Bank of Canada issued a report on that, basically their findings of it. I don't know why it took them so long, but they show here in this chart is the relationship between the growth in home prices and the growth in consumer spending. So, I mean, fairly robust, but again, we didn't need the Bank of Canada to tell us that. But I think what's important to highlight again in that report is it actually just kind of goes to show our cycle, and that cycle is that home equity extraction, which is basically people pulling money out of their home to basically spur into renovations, spending, vacations, cars, pre-sale condos, second house investments, etc. Home equity extraction topped in Canada. It peaked at $89 billion for the year. So home equity extraction hit $89 billion for the single year in 2017. I think that pretty much coincides with the top in the Canadian housing market, at least in the home price index. It's basically been moving pretty much flat or sideways for the last year and a bit. Of course, there are certain metrics or certain areas that are performing better than others. We know the out east is still moving higher to all-time highs. But in general, as a rule of thumb, in terms of sales activity and overall euphoria in the Canadian housing market ultimately peaked towards the end of 2017. But you can see how robust this relationship is and how important it is to the Canadian economy, because the Canadian economy is housing. It is so concentrated on residential investment and all the capital that has flooded into those segments of the market. And this is no reason, this should not be a surprise that governments continue to promote, subsidies towards the housing market. So we know that Justin Trudeau came out a couple weeks ago saying that he was going to increase the first-time home buyer incentive program in Vancouver and Toronto and Victoria upwards to a purchase price of about $800,000, which again would ultimately provide stimulus to that segment of the market. The fact that you're first-time home buyers purchasing an $800,000 home should initially raise some red flags to begin with. But this is the reason why homes are $800,000 to begin with, is because there continues to be government subsidization. Nobody wants to take the pain or the medicine. And it's the same thing. We had Andrew Scheer come out this past week. Now his platform or his policy is fixing the stress test, which I'm not even entirely sure what that is. Seems like he doesn't really have a plan on that. But he also wants to extend amortizations from 25 years to 30 years, which again, that doesn't really make housing more affordable. It might lower your payments, albeit temporarily, by extending the amortization, but it certainly doesn't help with home prices. And all it's going to do is basically pull demand forward and ultimately raise the price of houses in the long run. So it really doesn't solve any long-term issues. You can push amortizations out to 100 years. It's not going to make home prices less expensive. It's actually just going to increase the demand for housing, because people ultimately buy payments, they don't buy house prices. So it's funny because just looking at Joseph Walker, who covers the Australian housing market, has a really reputable podcast called the Jolly Swagman podcast, does a lot on the Aussie housing sort of bubble there, and we know that there are certainly some similarities to Canada. He actually did a Freedom of Information request on the Aussie home buying stimulus program. They basically brought in a program a number of years ago to sort of aid first-time buyers into the housing market, which is typical of most governments. And in that, he finally got the Freedom of Information, the documentation, and it says in there explicitly, in writing from the government, that the intention of the first-time home buyer program in Australia was to, quote-unquote, prevent the collapse, was quote-unquote to pull demand forward and prevent a housing collapse. That's basically word for word what this document said. So it's just funny to see because, unfortunately, your typical average voter basically buys into the premise that this is supposed to help with affordability and this is for my own well-being. But in reality, it's sort of just to sort of keep things going, and it's ultimately going to make actually housing less attainable, I think, in the long run. But I don't want to get too much into the politics. I think that this is just the way the governments act, and I think that because we've become so reliant on real estate and on really debt, it is a debt-fueled economy, that we have to essentially keep this going because there's so much debt, because asset prices are so inflated, whether it's real estate, stocks, bonds, etc., that you have to sort of keep this going. And so basically the rules of the game have essentially been changed, and this has sort of stoked at least some of my concerns or some of my positioning of transitioning away, not necessarily from being bearish, but just saying, okay, well, if the rules of the game continue to be changed, how far are governments and central banks willing to go to bring in policies? You would think that it would be obscene for a government to not only bring in more demand side measures such as like Andrew Scheer. I mean, the National Home Price Index, it's just a smidgen away from hitting all-time highs. So the fact that you're going to bring in more basically stimulus, and same with Trudeau, you're going to bring in more stimulus as home prices basically hit all-time highs, while the Bank of Canada, like it or not, is going to have to start cutting rates. So it's just goes against the countermeasures that conventionally what you would do to sort of stem or stop a potential bubble or excesses in a certain area is, a central bank would typically raise interest rates to, to slow down that sort of overcapacity. And what they're actually doing is the reverse. They're trying to sort of keep it and prolong it into the future. So kind of fascinated by that. But, again, when so much of your economy is real estate, particularly here in BC, I think we can see clearly what's happening is not only as home prices start to slow, but BC's GDP is roughly 25% real estate and finance. That business sentiment in BC has actually completely rolled over. And this is, I think, a result of falling home prices and the knock-on effects of that. And so you have sentiment here for BC businesses. It continues to slow. Meanwhile, insolvencies on a national level in the construction space are starting to tick up. They're definitely coming off a very low base. Unfortunately, the data only goes back to 2011. But what we can see is the number of insolvencies in the construction space here in Canada is starting to tick up. Now, again, I don't think this is anything to sort of write home about or stoke fears of, but you're starting to see it. And I think that at least here in Vancouver, where you're seeing it is in the single-family home builder section. People that were building spec homes, contractors and trades in that space is really starting to slow. Single-family home sales are starting to slow, and I think that's going to those insolvencies, at least in that space, should continue to rise. It is ultimately a lag or a delayed effect. I mean, just to give you an example, I had a client, this past week looking at a property, and he's interested in making an offer. And so what I do for my clients, we pull the title, we look at it, we see what kind of mortgages there are, then we pull the mortgages to sort of get an overall view of the position of the seller. And what we could see was this guy, between the two properties, he had built a spec home, been sitting on it for 2 years, trying to sell it, chasing the market down. And he had about $15 million, $15 million of debt on properties that I would value at about $11 million. So ultimately what I said to my client is this guy is actually not even going to be able to discharge the mortgages on title. This is a foreclosure waiting to happen. And he actually had a pending litigation on one of the properties. So that foreclosure process really takes a long time. And so I think that you should see the insolvency rate of construction and likely real estate companies, at least here in Vancouver, probably continue to rise, barring some miraculous stimulus here at the end of the business cycle. So that's kind of what I'm looking at this week. Other than that, I think from global markets perspective, I think things continue to look interesting. Lots going on. Continue to update on the Canadian housing front, but really just ultimately sort of a flat market here in Vancouver. And we'll touch on some of the statistics here at the end of September. So next week we'll probably do a video updating you on those figures. So anyways, hope that video helped. Otherwise, see you next week.